Trump versus big banks. President claims JPMorgan and Bank of America discriminated against supporters. Here's a bombshell that's sending shockwaves through Wall Street. America's most powerful banks are being accused of deliberately shutting out an entire political movement, and the allegations are coming straight from the White House. President Donald Trump has dropped explosive accusations that major financial institutions, including banking giants Bank of America and JPMorgan Chase, have systematically discriminated against him personally and millions of his supporters. But here's where it gets controversial. Trump isn't just making vague claims. He's backing them up with specific details about his own banking experiences that paint a disturbing picture of potential political weaponization in America's financial system. During a revealing CNBC interview this Tuesday, Trump didn't mince words about what he sees as targeted discrimination. They totally discriminate against, I think, me maybe even more. But they discriminate against many conservatives, Trump stated bluntly. But then he made an even more pointed observation. I think the word might be Trump supporters more than conservatives. And this is the part most people miss. Trump isn't just speaking in generalities. He's sharing personal experiences that allegedly cost him access to hundreds of millions of dollars in banking services. According to Trump's account, JPMorgan Chase delivered what amounts to a financial eviction notice after his first presidential term ended. I had hundreds of millions. I had many accounts loaded up with cash, Trump revealed. And they told me, I'm sorry, sir, we can't have you. You have 20 days to get out. The plot thickens when Trump describes his subsequent attempt to find alternative banking services. He claims that Bank of America also refused to accept his deposits, forcing him to scatter his substantial funds across multiple smaller financial institutions. The banks discriminated against me very badly, he concluded. But here's where Trump's allegations take on an even more serious dimension. Without providing concrete evidence, he suggested that the previous Biden administration actively encouraged banking regulators to destroy Trump by pressuring financial institutions to refuse his business. These aren't just personal grievances. They're accusations that could reshape how we think about the intersection of politics and finance in America. The question everyone should be asking is, if these claims are true, what does this mean for political freedom and fair access to financial services in our democracy? The banking industry's response has been notably measured, yet telling. JPMorgan Chase issued a carefully worded statement that neither confirmed nor denied Trump's specific discrimination claims. We don't close accounts for political reasons, and we agree with President Trump that regulatory change is desperately needed, the bank stated, while commending the White House for addressing the issue. Bank of America chose an even more cautious approach, declining to comment entirely on the allegations. Behind the scenes, sources familiar with the matter revealed to Reuters that during the Biden era, banking regulators may have questioned why institutions were providing services to Trump due to reputational risk concerns. This revelation adds weight to Trump's claims about regulatory pressure, though it also highlights the complex legal and reputational challenges banks faced regarding Trump's various legal entanglements. Intriguingly, despite these alleged discriminatory practices, JPMorgan reportedly maintains ongoing banking relationships with Trump family members and handles multiple Trump-related campaign accounts, a contradiction that raises even more questions about the true nature of these banking decisions. The policy implications of these allegations are already taking shape. Reports indicate that Trump is preparing to sign an executive order instructing federal regulators to investigate whether financial institutions have violated the Equal Credit Opportunity Act, antitrust laws, or consumer protection regulations by dropping customers for political reasons. This forthcoming order could authorize significant consequences for violating institutions, including monetary penalties, consent decrees, and other disciplinary measures. The Wall Street Journal suggests this order could be signed within days, signaling that Trump views this issue as an immediate priority. Market reactions have been swift and telling. As news of these allegations spread, major bank stocks took notable hits on Wall Street. JPMorgan Chase dropped 1.6%. Bank of America fell 1.4%. And even Wells Fargo, which wasn't specifically named in the allegations, declined 1.3% by mid-morning trading. However, some financial analysts remain skeptical about the lasting impact of these developments. David Wagner from Aptus Capital Advisors dismissed the controversy as rhetoric that will likely be forgotten by lunchtime, arguing that broader factors like deregulation will ultimately determine bank performance more than political discrimination allegations. The banking industry has consistently pushed back against debanking accusations, arguing that the real problem lies with excessive regulatory oversight, rather than political bias. The Bank Policy Institute, representing major financial institutions, placed the blame squarely on regulatory overreach and supervisory discretion. The heart of the problem is regulatory framework that gave rise to these concerns in the first place. The industry group stated, while expressing hope that any executive order would address flawed regulatory practices rather than penalizing banks. This isn't Trump's first public confrontation with major banks over alleged political discrimination. In January, during a high-profile QA session at the World Economic Forum in Davos, Trump directly challenged Bank of America CEO Brian Moynihan about conservative debanking practices. "I hope you start opening your bank to conservatives, because many conservatives complain that the banks are not allowing them to do business within the bank. And that included a place called Bank of America," Trump stated publicly at the International Forum. Adding another layer to this ongoing saga, the Trump Organization filed a lawsuit against Capital One Financial in March, alleging that the bank closed their accounts for political reasons rather than legitimate business concerns. In response to mounting pressure and industry complaints, the Federal Reserve announced in June that it was directing bank supervisors to stop considering reputational risk as a factor in their examinations, effectively scrapping a metric that had become a focal point of discrimination allegations. So here's the million-dollar question that deserves your attention and response. Are we witnessing legitimate concerns about political discrimination in banking? Or are these allegations part of a broader political strategy? More importantly, should financial institutions have the right to refuse service based on reputational concerns? Or does this create dangerous precedents for political persecution through economic pressure? The implications of this controversy extend far beyond Trump's personal banking experiences. If major financial institutions are indeed making decisions based on political affiliations, this could represent a fundamental threat to equal access to financial services for millions of Americans, regardless of their political beliefs. What do you think? Are Trump's allegations about banking discrimination credible, or is this controversy being blown out of proportion? Should banks be required to serve all legal customers regardless of political considerations, or do they have legitimate business reasons for avoiding certain clients? Share your thoughts. This debate touches on core questions about fairness, free market principles, and political equality that affect every American. Trump claims major banks rejected him. A controversial interview. Imagine the shock and surprise when President Donald Trump revealed that two of the largest banks in the United States, JPMorgan Chase and Bank of America, had previously turned him away as a customer. This revelation has reignited a contentious debate about whether conservative clients are being unfairly denied banking services. But here's where it gets controversial. Trump's claims have sparked a heated discussion about the role of politics in banking decisions. Trump shared this information during a comprehensive interview with CNBC's Squawk Box. He disclosed that JPMorgan Chase had given him a mere 20 days to transfer hundreds of millions of dollars in cash to another financial institution. However, he did not specify when this incident occurred. Trump then approached Bank of America to deposit over $1 billion, but was met with a refusal. Brian Moynihan, the CEO of Bank of America, said, "We can't do it." Trump recounted. This led Trump to seek out smaller banks, depositing significant sums of money in various places. "I mean, I was putting $10 million here, $10 million there," he explained. Following Trump's statements, shares of both banks experienced a slight dip, falling more than 1% in afternoon trading. This isn't the first time such claims have surfaced. Some conservatives, crypto executives, and religious organizations have alleged that they have been unfairly debanked by major U.S. financial institutions. Banks, on the other hand, maintain that they do not reject clients based on political or religious beliefs. Instead, they assert that they must comply with federal laws aimed at preventing financial crimes, such as the 1970 Bank Secrecy Act. These laws have put banks under regulatory pressure, especially in industries considered high risk for money laundering or fraud, like crypto. And this is the part most people miss. The issue of debanking is not just about politics. It's also about the complex regulatory environment that banks operate in. The topic resurfaced in January when Trump accused Bank of America's CEO Brian Moynihan of denying services to conservative customers. Banks find themselves in a difficult position. They risk further antagonizing the president and his supporters by addressing these grievances. But they have also benefited significantly from the Trump administration's efforts to roll back regulatory rules. The Trump administration is reportedly preparing an executive order that could impose fines on banks if they drop customers based on political grounds. A draft of this order, as reported by the Wall Street Journal, directs regulators to investigate whether banks have violated laws. A trade group representing large banks has suggested that regulatory overreach is the root cause of the debanking problem. Banking agencies have already taken steps to address issues like reputational risk, and we're hopeful that any forthcoming executive order will reinforce this progress by directing regulators to confront the flawed regulatory framework that gave rise to these concerns in the first place. A spokesman for the Bank Policy Institute told CNBC. Trump's comments on Tuesday focused on his business, likely referring to his real estate and hospitality conglomerate. However, it remains unclear whether the events he described involved personal, business accounts, or both. The banks discriminated against me very badly, and I was very good to the banks, Trump stated. Trump believes that banks rejected him and his supporters due to pressure from regulators during the Biden administration. In a March lawsuit filed against Capital One, Trump's company alleged that the bank improperly closed more than 300 accounts a few months after the January 6, 2021, assault on the U.S. Capitol. Capital One denied these accusations. JPMorgan has denied targeting conservatives or Trump supporters for debanking. We don't close accounts for political reasons. And we agree with President Trump that regulatory change is desperately needed, a JPMorgan spokeswoman said Tuesday. We commend the White House for addressing this issue and look forward to working with them to get this right. A Bank of America spokesman declined to comment. So, what do you think? Do you believe that banks are unfairly targeting conservative clients, or is this a matter of regulatory compliance? Share your thoughts in the comments below.